All right, back for another show. This one's going to be good. We had, a successful realtor on a few weeks ago. Now we got somebody that is an expert on the mortgage and lending side. So it's going to be fun to talk to James Matarazzo. How's it going, James?
Great, Andrew. How are you?
Good. Did I get that right?
You did. I've
Gosh,
heard it.
yeah.
I've heard it all.
I get
Maserati,
so nervous.
mozzarella. I've heard them all. So you did good on your first try. That's awesome.
I get so damn nervous about names because I am horrible. But no, thanks for joining me. I try to have a good variety of people on the show that can give some insight and just talk about, number one, your journey, and number two, what you're an expert in. And what I've been seeing right now from my realtor friends is like they're going crazy, tons of sales, just a lot of movement out there. And so it'll be great to talk to you more on that. But let's kind of start off with, walk us through, your career, where you're from, and kind of your journey to get to where you're at now.
Sure, I'd be happy to. Thank you. Well, the journey in the mortgage industry started in 1988, believe it or not, before the internet, when you had to walk into people's real estate offices and beg them to take loan applications from the buyers that they showed houses to over the weekend. And things have really changed since then. So I really started as a mortgage broker, worked for a couple of mortgage companies early in my career, and then transitioned into the banking side on the mortgage side as well, and worked for a couple of banks in a management capacity for many years. Worked on the wholesale side, which means my customers were not the buyers, they were the mortgage brokers, and I would actually have them submit loans to me on the wholesale side. So the banks that I worked with, you probably heard of them: Countrywide Mortgage, which was a bank; Washington Mutual Bank. I actually worked for Great Western Bank back in the day. I worked for MetLife when they did loans as well. So I've worked for mortgage companies throughout my career. I've worked for banks, and I've worked for mortgage lenders. And there's really a difference between those three in how the loans are really originated, processed, and fulfilled. So I've kind of seen it all. I've been through the crash of 2007, 2008 with Countrywide as a regional, and had 200 people reporting to me, and all of a sudden that job disappeared when the crash happened. And I kind of had to reinvent myself in the last 12 years or so since then. And now I'm working for a mortgage lender. I'm originating loans. I'm helping first-time home buyers. I'm helping move-up buyers. I'm helping people with their refinances. So it's kind of come full circle. I'm back to what I was doing back in 1988. I'm doing that again here in 2020 and beyond.
Can you kind of give us, like you said, the three different areas that you worked, and they're all a little different. Can you give us like a quick snapshot of the differences between those three? Just like for someone like me, you really, gave me a lot of knowledge from our first conversation, and just a lot of people out there might not know exactly the differences.
Sure. Mortgage brokers originate loans, but they don't have the funds to actually close the loan with their money. So they are relying on wholesale lenders to actually purchase the loan at the closing table. So there's pros and cons to all three platforms. The mortgage broker has various wholesale lenders that they can do business with and send a loan to get closed. And depending on the profile of the loan, they could have different interest rates for different loan programs at various wholesale lenders. So they can kind of shop the loan around, and they're just not beholden to one lender. So they can shop it around. So that's the mortgage broker side. With that, you kind of lose a little bit of control of the file. It could take 1.5 times to twice as long to close a loan, depending on volume and what the market's doing at that point in time. As a mortgage broker, a mortgage banker, or a bank, let's call it, your large banks, medium-sized banks, small banks, they can portfolio their loans. So you may have a little bit different guidelines, maybe some easier guidelines, what they call portfolio guidelines to underwrite to, but that bank will originate, process, underwrite, and close that loan with their funds in their name. And a lot of times the banks will service their own loans. And there's pros and cons to that. I work for a mortgage lender, which has access to hundreds of millions of dollars of warehouse capacity to fund our own loans. So I think I have the best of both worlds because I am in total control of my loan from start to finish. We have delegated underwriters to underwrite for all the different loan programs that we have, FHA, VA, conventional, etc. So I don't lose control of that loan. The processor is an employee of my company. The underwriter is the employee of my company, and so is the closer. So I'm in constant communication with them. My loans seem to go through the process a lot quicker and smoother, especially in this environment where interest rates are so low. Everybody's very backed up, but I'm still closing loans within a 30 to 45 day period of time. So I find that this platform at this point in time is most advantageous for me.
Yeah. Well, where are you located at now, and what areas do you cover?
Sure. I'm located in South Florida. I've been in South Florida since '77. I've been in the mortgage industry down here since '88, as I said, all in South Florida. West Fort Lauderdale, I live in a town called Plantation. Our main headquarters for the company I work for, which is Hamilton Home Loans. I'm a DBA of them, First Trust Mortgage Corporation. And I actually work out of the corporate headquarters in Sunrise, Florida.
Right by the Florida Panthers, right? Sunrise.
Exactly, right across from the Sawgrass Corporate Parkway. That's where we are, yes.
Okay, nice. So, you've been in it since '88, you said. You've got to have seen some major changes over the last, 30 years, just from technology to, everything. What would you say has been kind of some of the biggest changes that you've seen over the years?
Wow, there's a lot. Where I used to do things on paper, now it's all electronic. Even trying to originate the loans has changed because there's not a lot of real estate agents in an office anymore. They work out of their home, so everybody's remote. So the process has changed dramatically. Guidelines have swung from very liberal before the economic shutdown, so to speak, in 2007, 2008. And then the pendulum swung the opposite way where you had to almost give up your firstborn to get a loan because the guidelines really got strict. And then after 2010 to 2012 or so, things kind of moved back in the middle. And it had to correct itself. The days of doing a stated income loan, stated asset for somebody who has a 580 credit score, and we're not verifying their income, we're not verifying their assets, and we're giving them 80% loan to value on the first mortgage and 20% on the second, so they have no skin in their game. Those days are gone. So, and they had to be, they had to be gone, right?
Yeah.
So now things, you still have to qualify. The loan still has to make sense. And ultimately, when I'm looking at a loan, I have to look into my crystal ball and say, is this borrower going to make their loan payments? Do they have the wherewithal? Do they have the track record? Do they have the history of making payments on time? And are they making enough income to support not only the mortgage payment, but the other monthly debt? So I think those things have been the biggest changes in the industry as far as the guidelines go. We want to make sure that these people that are buying their first home, for example, are not biting off more than they can chew, so to speak. So we put certain parameters in place, income to debt ratios, credit score requirements. So it's not the Wild West anymore where you fog up a mirror and you get a loan. There's a lot of thought and guidelines that go into it, which is a great thing because we want everybody to succeed. We don't want foreclosures on our hands. That doesn't help the market. That doesn't help the economic environment. So guidelines have been very, very instrumental in keeping us going forward, especially after the economic downturn.
Was it like prior to 07, 08, was it pretty much like the wild, wild west, like for years and years, or was it just like a short period of time that it kind of got out of control? and got, it caught up to us?
Well, I could tell you the stated income loan or no income verification loan is what we called it back when I started in the business in '88. But those were really for doctors and self-employed borrowers that had a stack of tax returns this thick. And the underwriting guideline was, well, if they're self-employed and they have a lot of money in the bank and they have skin in the game, at least 20%, if not 25% or 30% down payment, we don't need to see their tax returns. We know that they're making the income because we can see through their assets, through their credit, that they're making enough money and they're making payments on time. That's how the stated income or no income verification loan was back in the late 80s. It kind of went off the rails in the 90s, going into the 2000s, where it wasn't necessarily just for self-employed people. There were loan programs from lenders out there that if you were a W-2 employee, you could even get a no income verification loan. And that's not really what it was for.
Right.
So yes, it was like the Wild West at some point in time. It got worse in the mid 2000s, but everybody thought appreciation was going to continue at these record paces and 20%, 23% year over year. So they figured, what's the problem? We can do almost 100% loan to value, stated income, stated asset. In a couple of years, they're going to have 80% equity in there, and it's going to be an 80% loan to value. So there's many reasons for it, and many opinions as to why that happened. What role did the secondary market play? Meaning, what role did Wall Street play? Who was funding these loans? Who was selling these loans? Who's servicing these loans? We've all seen the movies on what happened in the economic downturn. So everyone's got their opinion, but I lived it and I saw it, and I was at Countrywide when it happened and as it was happening. And it was just, I'm glad it's not going to happen again. I don't think it's going to happen again. And I think we've normalized.
So what did you do when that happened? I mean, did you take a break then from the mortgage industry, or did you, that's pretty much been your career for your life pretty much, right? So how did you kind of rebound from that and kind of move forward?
That's a great question. It was tough, not just on me, but it was tough on everybody in just about every industry. But the mortgage industry got hit tremendously hard. And especially for me in South Florida, it got hit hard. Ultimately, my career at Countrywide came to an abrupt end at the end of '07, just as this was happening. So my position was eliminated across the board. I couldn't, and I was a regional vice president for Countrywide at the time. And I just figured out, this was in December of '07. I figured I would just go get another job in January, take the holidays off. No big deal. I'm sure a bank will hire me, or, I have a great resume. I've done so much at Countrywide in my capacity. I shouldn't have a hard time getting a job. Well, little did I know, I couldn't even get a loan officer job at the time. So 2008 was a tough year. Again, not just for me. I'm not looking for pity. I'm just explaining what happened. My resume was such that I was overqualified to be a loan officer, and they weren't hiring any middle management or upper management whatsoever. They were laying people off left and right. So I had to reinvent myself and go from a regional vice president back to a loan officer / recruiter. I was building branches for retail shops in '08 and going into '09. Eventually, I went back into the wholesale side and managed a team of account executives in the Southeast, kept trying to build myself back up to that Countrywide position again. And it really never came back to fruition for me. So I've done multiple things in the last 12 years since the crash: originating, building branches, managing sales, managing operations, retail, wholesale, correspondent. I've done just about everything except ship a loan to an investor. So everything from the production and operations side, I've been in charge of or done. And as I said earlier, I've come full circle, and I'm right now, I'm just originating for myself. I don't have a team of loan officers right now. I'm not managing anybody else but myself right now. And I'm in the trenches again for the last year and a half or so. And it's, while things have changed, it's still the same. I'm still helping people achieve the American dream of home ownership, or putting them in a better financial situation with either a lower rate or a lower term or debt consolidation on a refinance.
So, I mean, right now, I mean, you're part of the company, but it's almost like your own business within that, correct? Is that kind of how it is structured?
Yes.
So,
Yes.
so how do you go about generating, business? I'm sure there might be some leads that come through, but how do you keep your pipeline filled and continue to build your business?
That's been my biggest challenge. And being in the business for 32 years does not mean I have realtor referral partner relationships or insurance referral partner relationships or CPAs or real estate attorneys, divorce attorney relationships for that long a period of time, because I've been in management for so long. So it's a great question you ask. What am I doing to fill up my pipeline? I do a lot of networking. Now it's all Zoom because of COVID in the last 7 months. So it's all about relationships, whether it's with real estate agents, those other different people that I just talked about, real estate attorneys, divorce attorneys, CPAs, financial planners. I want to help them with their clients. And if I can help them with a better mortgage program for them, then that's what we're doing, or that's what I'm doing with them. So I think that networking and selling myself, selling my experience, teaching a lot of realtors, not about mortgages, but how to partner with them and sell. I have a lot of tools that will help them with their listings, with their sales, basic sales skills. I've had a lot of sales coaching in my career. I've been a sales coach in my career. I just have to bring value to as many people as I can. So whether that's through networking, through realtor referrals, Facebook, LinkedIn, Instagram, just putting myself out there and partnering with as many people as I can, because I think we all have to help each other. And if I can help you from an insurance perspective and refer some of my clients that need homeowners insurance and need better coverage and a better quote, then I'm doing them a service. I'm helping you. I'm helping them. I'm helping the real estate agent. I'm helping the seller. There's so many people that are tied to it. Repeat business obviously is very important. So that's how I'm doing it. I don't buy leads. I don't want to buy leads. I just want to put myself out there and just spread the knowledge. And if I can help you and advise you, and that's why you see on the screen, I don't put loan officer on there. I'm a mortgage advisor. And I feel that if I do right by people, they are going to refer me. And by doing right by somebody, it may not be the best time for them to either buy something right now or refinance right now. And I'll tell them, so you're not in that position. I don't want to see you fail. Get this cleared up, save up some more money, lower that back end debt ratio. And then maybe in 3 months or 6 months, then let's put the plan together and start looking for a house with your real estate agent, and I'll help you with the mortgage.
Yeah. And I mean, you said something in there that it really, I mean, it's so true, and it involves so many different businesses, but building relationships, like true relationships, because, if I send you a referral or you get a referral from buying it, the close ratio for you is going to probably be a lot higher from the referral that I send you than you buying a lead. And, those relationships, I mean, once, you build up trust and rapport, it's good. I mean, I've already got somebody to send you, possibly for a refi. So just
Awesome.
from our talk the other day. So, it's like, it's a small world when you really start getting into it. And, with you, and just like with me and the insurance, I mean, you can cover the entire state, which is great. So, and with Zoom and all the technology, it's how often are you face to face anyway?
And that's true. I think we talked about that yesterday, and I just was telling somebody else the same thing. In the beginning, before the internet and everything else, I used to meet people and do their loan applications on a piece of paper face to face, whether they came to my office or I went to their office or I even went to their house after work and did a loan application face to face. And then since the internet and even before COVID, I find that people, while I'm talking to them over the phone, making the arrangements to take the loan application, I'll say, okay, we could do it one of three ways. We can meet either at my office or at your office, or we could do it over the phone, or I can send you the loan application link and you could do it whenever you want to. And they 99 times out of 100, they say, send me the link. And I say, but I'm going to lend you $400,000. Don't you want to see the person who's going to lend you $400,000? I said, I know I'm ugly, but I'm not that ugly. I said, don't you want to meet me? And they go, no, just send me the link. And I said, okay, I'll send you the link. And that's
convenience now.
It's very convenient, but I like to be, I'm old school, I guess.
Right. Yeah. I mean, it's good to have that personal connection. It's like a double-edged sword. Cause I mean, to really produce the volume, right. You can't physically, how many people can you physically go see as opposed to having them do it, that way. So it's like, kind of, a balancing act, I think. And, but I think those relationships are big because, you want to do a good job for them because it's not about one sale, right? I don't think you're approaching it that way. I mean, it's like, okay, well, hey, at some point they might want to refinance or they might want to upgrade or downgrade or buy a investment property or vacation home. So, it's not about the one sale. It's about building that relationship even with the client. So how would you say that COVID has really affected your business as far as just anything and everything?
Knock on wood, my industry has not felt the effect from a production standpoint. The interest rates are low. Inventory is low. Values are up. So supply and demand is dictating what's happening in my industry right now. With interest rates so low, there's a lot of refinances. Obviously, people are taking advantage of that. And with COVID, I think people are starting to pull out equity. We have record high equity in the homes throughout the United States for people to tap into when something like this happens, if it's advantageous for them, if it makes sense for them to do so. So COVID has, made people look at their house now and said, my house isn't as bad as I thought it was. Maybe I'm going to pull some money out of it and fix it up a little bit because I'm not going to move. I like the house. I'm going to fix it up. I want to stay where I'm at. I want to move away, or I want to move away from the cities out to the suburbs. I don't want to be in congested areas anymore. A lot of little things have really helped people make different decisions, and that they wouldn't have made it maybe back in February before COVID really hit. From my office perspective, the office has been closed since March. Everybody's working remotely. I think people, once we get a better handle of this pandemic and we start to see the light at the end of the tunnel and get back to a little bit of normalcy, I think people are going to look at their big, huge offices and say, you know what? I didn't really need this huge office. Maybe I can cut my office in half, have my employees work remotely, because we have not gone down one iota as far as production goes. The production has been increased and we haven't missed a beat. So we really don't need this nice, big, cushy office space anymore. People I feel work more from their home, and they work more at home than they do if they have to take the time to get dressed, make the commute to their office, get to the coffee pot, talk to the coworkers, then sit down, then work, take an hour for lunch. I mean, people are working through their lunch. It's not healthy, but I just find that people are working more by working remotely. A lot of that is due to COVID also. So not only externally has it affected my business, but internally too, company wide. I mean, it's there's not a necessity to go to an office per se all the time.
Yeah. And I mean, I've noticed it too. Like, just, I feel like I can get so much more done in a day now. And, I mean, I try not to have a commute anyway. Like when, I try to live close to where my office is, but, even if you have a 30-minute commute each way, that's an hour right there.
Mm-hmm.
And then, what I've noticed is, managing, sales forces and just teams of people is when you're in an office environment, there's also wasted time of just BSing around, and it might even be like, 30 seconds here or a minute there, or just little stuff. Or for me as a leader, being distracted because people constantly are knocking on my office door or having questions where, with Zoom, with stuff like we're recording now, pre-COVID, I was on some Zoom calls, but I never utilized it. Like I never was the host. Now I use Zoom and those features like daily. And I feel like I've been able to be a lot more productive. So, I think we're going to see a lot of companies kind of shrink up that size and give people more flexibility. At the end of the day, it comes down to production, right? If they're not going to produce at home, then it won't work. But if they're able to produce equally or better, I think a lot of companies are going to be flexible. And you've kind of seen that with realtors in the last probably 5 years. I've noticed more, and I'm not in that field, so maybe it was longer, but I noticed more and more of them are working remotely. And you have what's the one realtor, EXP maybe, or one of those that is like a virtual
Virtual, yeah.
And so it's good and bad. It makes it harder to drop in and say hi to people,
Right.
But I think like you and I, corresponding through email and people through LinkedIn, and reaching out. That's the thing I've focused on, is reaching out and trying to connect with new people. You have 5 or 10 minutes to jump on a call. Mm-hmm. Tell me more about what you do. And because I'll be honest, before we talked, I mean, I've heard about the different areas of, lending and mortgages, but I never really had a clear understanding of it. And it makes a lot of sense. And so it's good. So now I know what you have to offer. And in our business, both of our businesses, it's building relationships, and you're going to come across people that could use something that I have, and vice versa. And so it's always good to really kind of just learn what people can offer. And you're helping people. You're helping that person, plus you're also helping your other connection who you're connecting with. So,
right.
So no, it's pretty cool. I mean, I'm excited to see. Do you think that they're like, as things, go back to normal, do you think, some of the things that you've done during COVID will kind of stick long-term just because, they were more practical for you as well?
I think so. But prior to COVID, I think I networked with a group on Tuesday mornings only. And now I'm networking 4 days a week, multiple times a day through Zoom networking. And I enjoy it. I've mastered it, I think. I'm meeting more people than I have ever met. I would have never met a lot of these people, because if they were an hour and a half drive from me, I wasn't going to network up there every week. But if I turn on the computer and it's 8 o'clock in the morning, I don't care if it's on an hour and a half away or 4 hours away. It's right there on the computer. So I think I'm going to stick with that. I may do some more face-to-face once everybody's more comfortable with it, including myself, once we get a handle on this. So I think those things will stick. I don't think I'm going to lose anything other than my office, which I've already cleared out my office. I don't need to go there anymore at the corporate headquarters. If I need to meet with clients and use one of the conference rooms, that's easy. I can just reserve it on the computer.
Yep.
Meet the clients there, spend the 15 minutes or an hour, whatever it is, and then I'm back out again. As a salesperson, I didn't spend a lot of time in the office anyway, because I was out visiting clients or referral partners or doing presentations. I can do so much more of that from the computer with Zoom So I'm embracing it. I want to reach out to as many people as possible. So I thank you for allowing me to do this podcast with you. I want to do more of this.
Oh yeah.
I'm just starting to do first-time homebuyer seminars, for example. So instead of trying to find a location and spend $100 to rent an auditorium and try to fill it up with 100 people, I just put it on Facebook and say, hey, you want to come and listen to a first-time homebuyer class? Come on in. And that's what we're doing now. And it doesn't cost me anything. And I'm reaching out to almost as many people anyway, probably more people, depending on who in the class. So that part I'm embracing, and I like it.
Well, and I've really been preaching, I mean, I only started my podcast during COVID, and, I've really been preaching to people like, man, this is, and even in what you're doing, like, creating videos that, are informational, that can help people, like, from, very beginner all the way up, geared towards the home buyer, geared towards your referral partners. There's people that want to take that information. They want to get that. So, I mean, using social media to, build your brand, so to speak. That's kind of what I've been doing, is building my brand and, my expertise in my area, so that hopefully I'm top of mind when somebody comes up and is like, oh, hey, call Andrew.
Mm-hmm.
He's all over. Check out his videos. And the one guy I had on my podcast, he got my newsletter kind of like you did. He said, hey, do you have 10 minutes to talk? I had some questions, and he wanted to start a radio show. And so, I spent, a good hour on the phone with him, the first call, and, he ended up launching his own podcast, and now he's got a video series that he puts out on a regular basis. He's selling, multiple houses a week right now. And it's just cool to see, because before he was going to go do a radio show that he was going to have to pay all this money, and it was going to only cover one little city. Whereas now on the internet, he's able to reach, a broader group of people. But there's just, people want information. People have more time, it seems like, because of COVID. So I think what you just talked about would be a great thing, to offer, because it's, it's kind of like insurance that I'm getting in. Is there's a million people that you can get your insurance from. So how do I get them to come to me?
Right.
Hopefully it's because they feel that, they're going to be treated, properly. I'm knowledgeable. But you got to be out there. How do they remember the name as opposed to the next guy, without, being one of these guys spending, millions of dollars a month on ads, so.
Right.
So it's fun.
You hit the nail on the head. You're selling you. You're not selling insurance. You're selling yourself. I'm selling me. Most of my realtors, honestly, and I don't want to say anything bad, but they don't know the name of my company. They know me.
Right. Yep.
They know me and my phone number. That's all they need to know.
Yeah.
They don't know what company I work for, because it's me. I am making sure that process goes smoothly from start to finish. And they know I have a team of people behind me. They may not know their names, and they may not know the company that I work for. And you mentioned it, branding. We are branding ourselves as the SMEs, the subject matter experts in our fields. Yep. And that's all we can do. And if we can be honest with people, and we advise them, again, that's why I put advisor on there. I'm not a loan officer. I'm not an order taker. Right. I'm going to give the loan that you want, because you're going to have to be the one making the payment, not me. So I want you to be happy with it. I will guide you through the process, and together, collectively, we will figure out which loan program, payment, etc., is best for you. And then ultimately, it's your decision. I'm just going to help you get there.
I mean, it's like solution or consultative based, selling. I mean, you're really finding out, what their needs are, and going to guide them into the best fit for their specific situation. My situation is going to be different than the next guy. I mean, I'm self-employed. We talked about that yesterday. It's just some of the challenges for that. Right. But the cool thing is, talking through it, there's good options for just about everybody from talking to you. And so it kind of gave me hope, because I was like, yeah, I'd like to end up buying. I just moved back to Florida, so I'm renting right now, and want to position myself to buy when my lease is up. So it's good to kind of reach out and talk. Do you guys do you work with investors at all, as like home investors, like people who just buy homes and flip them and things like that? Or is it more traditional type stuff?
There's financing available for that. I don't particularly do that. Not that we can't do it. It's just that it's a more arduous program. It's a lengthier program. There's a lot more involved in it. I do have end investors that will buy that loan. So it's out there. It may become more prevalent down the road, maybe sometime next year, hopefully not, but in the event that some foreclosures start to pop up because of COVID and the extenuating circumstances that entails, I think those programs are going to be more prevalent, and I think they're going to be much more important. But there are investors that are doing the fix and flips. We have rehab loans now if you want to fix and hold and live in the property.
Right.
So we do have those programs. FHA has those programs. Fannie Mae, Freddie Mac have rehab loans too. So they're out there. What I focus mainly on are FHA, VA, conventional jumbo loans, just straightforward loans. The ones that have rehab and everything else, there's a lot that goes into it to get a contractor. Contractors, they're going to want. It's a lot to go into. It's
a lot of paperwork.
They're out there. It's labor intensive, but they're out there. Mm-hmm.
Yeah. So have you heard anything, or what are your thoughts? I know the government had some things where people couldn't be foreclosed during COVID, and I think it just ended, or it's about to. Have you heard any rumblings out there on, are a lot of people giving up on their homes, or is it pretty steady right now?
That's a great question, because living through what I lived through in 2007 and 2008, when the foreclosures just started almost immediately, it felt like we're in a different time frame now. We're not going to hit that bubble because there's lack of inventory. So I thought I would see a lot more people in forbearance. And that's what the government was allowing people to skip mortgage payments, put them either at those payments at the back end of the loan, or just hold them separately and have them make them up in time. I thought I would see more of that. I have seen some of that, and people have maybe skipped one or two mortgage payments because COVID and they allowed them to, but they've made them up. Now they're current. They're no longer in forbearance, and I'm able to refinance them. And that's one thing that I have seen. So I haven't seen a lot of people not go into forbearance only, and that's it. They did it for a short period of time. I was happy to see that. So it wasn't a long elongated time frame.
Yeah. Well, and now it sounds like is a great time to refinance if you can, because the rates are so good.
I just locked a loan in yesterday, 1.99 on a 15-year fixed, under 2%. That's
like free money.
Exactly. 15-year fixed, and the APR was probably 2 3/8 because there was some discount points that had to go into that. Yeah. But still, this is what that borrower said. I want to be out of this loan in 15 years. I want the lowest rate possible. Don't care what it costs. I laid it out for them. I told them what their break-even point was going to be, and they said, "I'm fine with that. Let's lock that puppy in." So,
nice.
Like you said, it's almost like free money. On a 15-year fixed, they're refinancing from a 30 to a 15-year. They're not pulling any cash out. It's just a straight rate and term refinance. And yes, I was happy to do that for them.
All right. Well, so I'm kind of looking at your different pendants and stuff in the back. So tell me about this. I'm guessing you're a baseball guy. Did you play baseball or?
Yeah, so I'm a big baseball fan, as you can see behind me. I grew up in Brooklyn, New York. I wanted to play shortstop for the Mets. I still want to play shortstop for the Mets. I know it's not going to happen.
Never too late, man. Never too late.
I keep telling my kids, build a time machine so we can go back in time and I'll do it all over again. I wanted to be Bud Harrelson ever since I was a kid. So yeah, I'm a big Mets fan. And then when I moved to Florida, I had to unfortunately give up the Mets for a little while and root for a local team, which was the Florida Marlins, until they moved to Miami. And then I said, you know what? I can't drive all the way down to Miami. And I didn't like the way things were happening with the Marlins. So I went back to the Mets, and I'm stuck with them. I'm sticking with the Mets. So I'm a Mets fan. I'm a Jets fan. But
so it's been rough. It's been rough for you.
I know. I'm a glutton for punishment. I think it was 3.5 when the Jets won the Super Bowl. That was it.
How about hockey and basketball? You fans of those sports?
Yeah, I love the Heat. I love the Heat even before LeBron James went on there, and even before Dwayne Wade. So I've been a Heat fan since '88, since they came into fruition. And I gave up the Islanders for the Panthers. So the Panthers, I can probably ride a bicycle to go watch their games. They're not too far from me, so I root for the Panthers.
Nice. I'll tell you what, I was I really liked the way the Heat played this year. I don't know, just like the tone about them. Like they just seemed like a hardworking team, Yeah. So it was kind of, I was rooting for them. Plus their home state. So you got to go home state. Been down to Miami for a few of those games, but no, that's good. So, well, I mean, maybe one day you can make, shortstop. I mean,
those days are done.
Well, what about you? You told me you did a little fantasy baseball.
Yeah.
Did you get to play shortstop?
They put me at third base. I think I was in my 30s at the time. So I was one of the youngest players out there at the fantasy camp. Okay. I was the only one that could make the throw from third base to first base. So they put me there at third base, but it was great. It was awesome. I met a lot of my heroes. I met Bud Harrelson. So when you meet your idol and you get to spend time with him, and I wore number 3, and when your idol says you did the number proud, man, that just made my whole day. That was awesome. So yeah, it was great. A great experience. I'm so glad I did it.
A friend of mine, he did that with the Cardinals, and he told me like the first day they were like, "Look, guys, I don't want to crush everyone's dreams, but you're not going to get signed. So let's just have fun. Let's not go out there and get hurt. Somebody ended up tearing their Achilles or something. It's like."
It was a lot of people in the training room. Believe me, hamstrings, elbows.
At 30, you're starting to feel like, okay, my body doesn't recover like it used to, but you probably were able to get through that no problem. But some of those guys that got to the spring training fantasy thing, I mean, it's a wide range. I mean, you got some retired people that'll go out there as well, and those are cool experiences. So.
It was.
That's pretty cool. All right, last thing back on mortgage stuff, because I was thinking about this. So is there any assistance for like down payments or help in getting into homes? Because I know sometimes that becomes, a deal breaker, that somebody doesn't have quite enough or whatnot, but they can afford the home and they just don't have the cash.
Yeah. Prior to COVID, I had done 3 or 4 down payment assistance program loans, and each city and each county throughout the state of Florida has their own down payment assistance program. So I would encourage any first-time home buyers, if they're thinking of purchasing a property and they know what area, what city, or what county at least that they're looking to purchase, just Google down payment assistance program, city of blank, whatever city it is. And you'll see that city's down payment assistance program with their guidelines, with the parameters. And a first-time home buyer is somebody that has not owned a home in 3 years. So you could have owned a home 5 years ago.
Not even first-time home buyer.
Yeah, exactly. So it's a lot. So that's a good thing.
Yeah.
You don't necessarily have to be the first-time home buyer. Just within 3 years, you couldn't own a property. And there's some income limitations because they want to give people that really need the down payment assistance, they want to give them the money. And the money is either a grant or it's a second mortgage that sits behind the first mortgage that I'm going to provide them. So I'll give you an example. If they're looking at a $250,000 property and the city of wherever has a down payment assistance program that can give them $50,000 to use for the down payment, they can use it for the down payment or the closing costs or a combination of both. My first mortgage in this example would be $200,000. They're going to have $50,000 from the city for the down payment assistance program. They would need to come in with about 1% of their own money toward the closing costs, but they are getting a $250,000 property, but the loan amount on it is only $200,000, and they didn't have to come out of pocket.
Coming in with $2,500.
They can, yes, they can come out of pocket with $2,500 in that example. So, but prior to COVID, I was closing those loans, and I get those calls all the time, and I check with the cities when I'm talking to a first-time home buyer. And unfortunately, with COVID, a lot of these cities, because the city halls aren't even open right now, a lot of them are shut down. They're not doing the down payment assistance program. They put it on hold until after the first of the year. There is an 8-hour course that the home buyer must go through, and it teaches them about budgeting and what the costs are associated in owning a home, because a lot of people don't realize you need principal, interest, taxes, and insurance. Homeowners insurance, what is that? If there's homeowners association fees, what is that? So they teach them all of those things. You take an 8-hour course, you get a certificate, and then with that certificate, you come to me, and we go ahead and I do the first mortgage, and I work with those cities to provide the secondary financing or the grant.
Now, when you do that, is it a specific type of loan that you end up doing, or can it be like a variety of offerings that you have?
Yeah, it can be an FHA, a VA, or a conventional loan.
Nice.
So they don't, the cities don't really care what the first mortgage is. They have their own guidelines for that $50,000 second mortgage or whatever that amount comes out to be. The first mortgage is on me. I have to make sure the borrower's qualified for that first mortgage. They make sure the borrower's qualified for that grant or that second mortgage. They don't care what program it's on.
And from a lending standpoint, you're looking at, there's equity there. Is that kind of, or that, the ratio for the, the value to what you're financing with the first mortgage, is that what's helpful? So instead of, you funding 250,000, you're only funding 200 on a value of over 250.
Sure. My loan to value is very low. So I'm not concerned about mortgage insurance at that point, because there's more than 20% that's put down. Whether it's put down by the borrower or the down payment assistance, the city that gives them the down payment assistance, doesn't matter. My loan to value is low. So that's good.
How do people even find out about this kind of stuff? I've never heard anything like that. Like,
I want them to call me.
That's the thing. I mean, that's why you need, a mortgage advisor. I mean, because I wouldn't have known that. I don't think a lot of people would have.
A lot of my real estate agents don't know about it. So I'm, informing them and partnering with them, putting on classes together with my real estate partners. And we're reaching out to renters, for example. And we're saying, look, you don't have to necessarily rent and pay the landlord's mortgage, when for the same amount that you're paying for rent, you can maybe buy your first home, and there's down payment assistance money available in your area to help you with that transaction. So it's just a matter of educating.
I'm going to look it up. My daughter, she's 23. She's getting to a point where she wants to look at purchasing something. So that might be a good program for her, because she's 23, so she doesn't have a ton of money saved up. But no, that's great. Those are the types of things, though, that's why you have to call a professional, and walk us through how to do it. But so tell us how people can find you and reach out to you.
Sure. The easiest way is my cell phone. My cell phone hasn't changed in I can't tell you how many years. And I don't have an office phone, so everything's through my cell phone. My number is 954-648-7848. That's 954-648-7848. That's the best way to get a hold of me. If you Google me, I have, with my name, there's not too many James Matarazzos in the mortgage industry, so you should be able to find me, especially in Florida. New York, there might be a bunch of James Matarazzos up there. So don't make sure you're in Florida when you're looking me up.
Yeah,
and I'm on
you're on
LinkedIn, I'm on
too.
Facebook. Yeah, I'm all over the place. So
Yeah. No, James, hey man, thanks for joining me. It was great chatting with you and, you know, kind of getting to know a little bit more about what you guys do and kind of your journey along the way. So, you know, I'll definitely be reaching out for my mortgage needs.
Awesome, Andrew. I appreciate it. Anytime you want me back, and if you want me to bring up any additional programs and just kind of spotlight anything like that, I'll be more than happy to help you with that.
Yeah, appreciate that.
Awesome.